Who else has hated all this tariff drama? Okay, it's really slowed down the bull run. It's caused a lot of fear, pain, confusion. But this time there's a surprise because Donald Trump announced Americans might be getting $2,000 checks from tariff dividends. The last time something like this happened, markets went absolutely nuts, so stick around to see why it matters. So Trump dropped a pretty bold promise. Americans could get $2,000 tariff dividends. This is crazy. Tariffs made a lot of money. He's going to splash some of that cash back on voters, taxpayers in particular. On Truth Social, he wrote, a dividend of at least $2,000 a person will be paid out to everyone. But let's get real, it's not official yet. The math, let's see. Tariff revenue for fiscal year 2025 is about $195 billion. Impressive, but far short of the $300 billion needed if most adults would qualify. So I've been talking about, only people who make under $100,000, but people who actually pay taxes. So it would exclude a lot of people. Maybe that would make it work. Anyway, Supreme Court is viewing the legality of tariffs right now, and even the Treasury Secretary hinted that the dividend might come as tax cuts rather than checks. Well, not bad, but not the same. So yeah, it's more campaign promise than policy potentially right now, but here's the kicker. What if they follow through on it? What if they really make it happen? Because the last round of stimulus checks sent Bitcoin and equities to the effing moon. Yeah, okay, we also had 0% interest rates, and it wasn't just stimulus checks, but gosh darn, it helped. Stimulus checks are nothing new. They just come with different names, rebates, rescue plans, recovery acts, whatever it might be. One thing always holds true. They're meant to give the economy a shot of pure adrenaline. Now, Trump's proposal is labeled as tariff dividends, but if you look closely, it's built on the exact same idea here. Get money into people's hands so they can go out and spend, baby, and hope the economy catches on fire. Trump's stated goal, he wants to run the economy super hot. He wants super low interest rates. He wants money to be flowing freely. He wants the housing market to unfreeze. He wants the stock markets pumping like crazy. He wants America to be the capital of AI, the capital of crypto. He wants to give money back to people so they can go out and spend. During the pandemic, the CARES Act of 2020 unleashed the biggest flood of cash in U.S. history, $1,200 per adult, $500 per child, along with expanded unemployment benefits, large-scale business relief programs. It was crazy. They were splashing money everywhere. A few months later came the Consolidated Appropriations Act of 2021, adding another $600, and then the American Rescue Plan Act of 2021, the grand finale, $1,400 checks that even included dependents. Bank accounts swelled, spending exploded, and markets went absolutely crazy as people bought dog coins and all kinds of other crazy bullshit. And if we go further back in history, during the global financial crisis of 2008 and 2009, Washington, D.C. used the same old playbook, didn't they? The Economic Stimulus Act of 2008 provided rebate checks to the taxpayers during the early stages of the recession. Well, the American Recovery Act and Reinvestment Act of 2009, signed by President Obama, rolled out a comprehensive recovery package that included direct payments, infrastructure spending, and tax incentives. Every single time Washington floods the economy with cash, it triggers the same chain reaction in risk assets. Confidence surges. People spend. Companies hire more. People borrow versus their house, all this kind of stuff. Risk comes alive in the markets in a very dramatic fashion. Something that only happens once every few years. Asset prices melt up like they've been shot with rocket fuel, because essentially they have been. It's a real play on psychology. Think about it. What happens when people suddenly get extra cash? Yeah, most will spend it on, maybe important stuff like replacing the tires in the car or something like that. But essentially that money starts circulating through the economy. Some people will save it, some people will invest it, pushing liquidity in the markets, okay? But even the people who spend it, give it to the mechanic who goes out and buys dog coins. So it's a virtuous cycle anyway. Either way, it breeds optimism, and optimism fuels bull markets, okay? The proof is in the market moves. After the American Recovery Act and Reinvestment Act of 2009, the S&P 500 shot straight up, kicking off a multi-year bull run. Fast forward to the pandemic, each round of COVID stimulus checks had the exact same effect. Once the money hit people's bank accounts, spending surged massively. Confidence surged. The markets followed suit, lining up and going into price discovery mode. The pattern is very clear. Direct cash injections don't just help households, they ignite the asset markets as well. And when those asset markets ignite, you're gonna wanna keep your coins safe with a Ledger hardware wallet. These things are absolutely insane. I've been using these literally since 2017. Not this exact version, but newer versions. This thing's absolutely beautiful. Look at that bad boy, very nice. These things are top of the line security devices. If you have any reasonable amount of crypto, Bitcoin, Ethereum, Solana, whatever, you're gonna wanna lock it up in a safe, okay? Don't just leave it laying around in a hot wallet. You're asking for trouble. The question you have to ask yourself, will you start taking your crypto security seriously? And guess what? When you buy a wallet like this, or maybe like this one right here, beautiful wallets. When you buy one of these wallets, using the link right down below, you're gonna get 10 bucks in free Bitcoin. Never been a better time to secure your coins. Link down below, go check it out. Thank you very much. Now look, back to this, guys. Of course, stimulus checks alone will not cut it. We're lucky that there are still some macro factors working on the market's favor right now. One of the biggest is that the analysts out there are calling for basically stealth QE or quantitative easing to start happening, where the Fed starts buying back bonds off the market. The Fed recently announced that by December 1st, it will stop its quantitative tightening program, which is very positive. And instead of letting maturing bonds shrink the balance sheet, it effectively removes cash from the system. The Fed's actually going to roll them over and keep liquidity flowing. Now, when the Fed starts buying again, demand for bonds goes up, and when demand rises, bond prices climb. So a $1,000 bond paying a fixed interest of $50 might now trade for $1,100, same $50 coupon, but effectively the yield drops down to about 4.5% instead of 5%. Anyway, that drop in yield pushes investors to look elsewhere for returns, okay? Especially as we keep seeing interest rates coming down, which there's a lot of calls for a 50 basis point cut in December. Probably won't get it, but even 25 then, and another couple 25 next year. Suddenly everything else starts looking real good compared to bonds. And yeah, they'll even chase riskier stuff like stocks and Bitcoin and whatever else. On top of that, rate cuts are coming, okay? Giving the market another boost if the economy shows signs of slowing. There are weaknesses in the job market. They'll have to keep cutting rates. Combine these factors with potential tariff dividends hitting American bank accounts, and the stage is set for another big surge in risk assets. Housing market unfreezes. CapEx on AI companies goes crazy. Trillions of investment that Donald Trump got is going to bring him hundreds of thousands of jobs. Yeah, Lark Hopium. I know these stimulus checks aren't guaranteed, and with Trump's 4D chess moves, who the hell knows, right? Probably not going to happen by the end of the year. Maybe never. Some experts think the money collected will not cover all of it. Nevertheless, this is what you would call the icing on the cake. You can still eat the cake without it. It's still going to be a good time. But just imagine this. One post from Donald Trump, the market suddenly turns bullish and probably starts front-running the coming of hundreds of billions of dollars in stimulus checks. I know it's hopium, but if a possibility exists that can flip the market green, stimulus checks is definitely one of them. And it's not just potential tariff dividends. There are a lot of other bullish factors converging at the same time, and each one of them adds more fuel to the fire. Quantitative tightening ending, government shutdown, well, by the time you watch this, should well be resolved. Stealth QE is quietly keeping liquidity flowing in the background. When the government reopens, by the way, they're going to start draining the Treasury General account, injecting hundreds of billions back into the economy. We're talking real numbers here, okay? Economists are still expecting a year-end rate cut as the job market continues to weaken. The AI narrative is still lighting the fuel under the fire of the tech market, the growth sectors in the economy. On top of that, record stock ownership and Bitcoin going mainstream are new factors that we simply have not seen in past stimulus check cycles. Combine all of these elements together, and you could very well see a massive final leg of the bull run before the next bear market arrives. That may take us well into 2026, by the way. History, psychology, and today's unique market setup all point to one thing. Risk assets have a wide open window to rally hard to the upside. Doesn't mean they don't jump through the window and fly. They might jump through the window and crash to the ground. It's always that possibility. But the odds would favor the upside. And I don't blame you if you feel the bear market snuck up on us. With this macro backdrop right now, the bullish setup is impossible to ignore. Maybe we have the best possible loose financial conditions, macro tailwinds basically ever in any market cycle, and all goes to shit anyway. Can happen, but maybe not. And if you love this macro analysis or just want to go deeper on crypto, Bitcoin, stocks, stock reports, all that kind of stuff, check out our free newsletter. Link down below. You'll love it. It's free. It's awesome. 180,000 plus people a week are reading it. You can be one of those people. Link down below. Go check it out. Thank you very much.